Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, the main man of the hour, AJ Brown. Good morning, AJ.
Hey, Sip, how you doing?
Today is December 2nd. Wow, we're in the last month of the year, and we still don't know what's going to happen. A lot of news coming out. Specifically, this morning we had employment numbers.
Yeah.
Earlier in the week, we had some inflation numbers. I feel like the market's ticking up a little bit, but we're still kind of in that wait and see period. What are you seeing on your end?
Yeah, absolutely. I mean, let's take a look at the economic calendar before we look at our chart. So if I take a look at the economic calendar, first things we got to point out is Tuesday is when the economic news started to roll in. We got consumer confidence numbers. Nothing really special there. Came in basically saying that consumers are still confident, right? They're not losing their confidence yet. It's almost like all these tactics by the Fed, although they're creating lots of news headlines, people are still buying, right? GDP came in. Let's take a look really quick at the GDP numbers. GDP numbers came in warmer than expected. That kind of got investors excited. You can see here they were expecting, this is for quarter three, they were expecting 2.7%. They got 2.9%. And the annual rate of personal consumption expenditures went up just a tad there. And if you take a look at the chart overlaid with that, that was kind of some positive news. You can see that we were going for a tick down, and we actually thought that that was going to be the end of this current little mini rally. And then because of that little hit with the GDP numbers and investors starting to buy, it also had a lot to do with the Fed chairman, Jerome Powell, making a speech and kind of hinted that he might, they might be slowing down their interest rate hikes. At the same time, if you really look at the transcript, he also then immediately followed that statement with one saying, yeah, but things are still unstable, so we got a lot of work to do. But people ignored that second half of the statement. And so I think a combination of the good GDP numbers and that Fed speech caused a whole bunch of buying. But then reality was set in very quickly, because then we got our PCE numbers. These are the personal consumption expenditures. This is a number that the Fed uses a lot. This was like one of Alan Greenspan's favorite numbers, and through Ben Bernanke and Jerome Powell and all these different Fed chairmen, they've all used it. And you can see that they're way hotter than expected. Personal consumption expenditures, personal income grew, expenditures came in just about where they expected. Price index, here's the core PCE price index, starting to moderate a little bit, but probably not enough. And so what you could see is people started to kind of lose their excitement that they had the day before. And then, of course, today, you're right, the employment numbers, they were a little bit on the warm side, but people had already kind of gapped down. Overnight investors sold off. So even if we wind up having more than a doji day, which is where we are right now, meaning things are just kind of in a stall sideways pattern, man, those employment numbers, let's take a look at those really quick. Employment situation. They basically say things are still going. Now, we know that tech companies like Twitter or Facebook, we're hearing it all over the news. Tech company are doing layoffs, but every other sector in the economy is still hiring big time. And you can see that right here. This is for November. You can see that they expected 200,000 jobs to be created. 263 were. That's still quite strong. Private payrolls, they expected 200,000, 221,000. Manufacturing, that's the only place where we saw some weakness, was there was some drop in manufacturing. But otherwise, the employment situation is saying, hey, maybe these Fed actions are not as strong. I like looking just really quick. The CME group. So the CME used to be the Chicago Mercantile Exchange, where the S&P 500 was traded and all kinds of like commodities were traded. But then they started to pick up a whole bunch of other exchanges. So now they call themselves the CME group. They have this ongoing kind of poll through watching people's investments of how much investors think, what the probability of rate hikes are. And so this right here is what investors think of a 50% rate hike. And then this one down here, this is a 75, another 75%, 0.75 or whatever you want to call it, 75 basis point rate hike. And so you can see right this minute, investors think that there's a 77, more than a 3/4 of a chance for just a half a point. And then the rest of the people, nobody thinks it's going to be a 1/4 point. That's this one up here that says 0. And then there's this one down here that says 23%. And you can see that as of today, as of those employment reports, compared to what it was over this past one day or 1 week, you can kind of see that over the last day, the sentiment's gone down. Over the last week, it's kind of gone up that we're going to go for a half point. And over the last month, yeah, everybody's starting to believe that it's going to be a half point. But you never know. We learned, especially from a lot of these elections here in the United States, that kind of looking forward and taking polls of what people think will happen isn't going to necessarily be representative of what actually happens. The only people who know what's actually going to happen are those men and women who sit at the FOMC meeting that comes up in a couple weeks.
And so the consensus per this data is a half basis point. So if the next meeting we come in at a half basis point, then the market is already pricing all that in. But if it goes higher, then that's going to be what's going to shock the market, and we're going to have a reaction of some sort.
Yes, we're going to have a pullback for sure. I kind of think I'm sticking with my guns from last week. Last week, I said that we were going to have a pullback because we keep reaching higher. My retracements keep kind of adjusting themselves. Let's take a look at where they are right now. So the highest close I've had was on Wednesday. And so kind of ticked up a little bit. I still think we're going to have a little bit of a pullback probably before the next Fed meeting, somewhere between this 3,850 mark that I have right here, 3,850 to about 3,950. So it's a little bit higher than it was last week, but there's this range of about 100 points between 3,850 and 3,000, let's say 3,940. Between these 2 points, I think that we're going to have a pullback there. But then I think exactly like we said, the Fed's probably going to go along with what people are expecting, which is a half point rate hike. And I think that you're going to see the market go temporarily higher.
And so this is the reaction of some of the surface data, right? And so one thing that I know you like to do is you like to look at some of the things behind the scenes, right? And I know you showed a really nice graph earlier with some of, I think the overarching story from what we've talked about previously is that consumers are still spending, right? The cost of goods is increasing, wages are increasing a bit too, but that gap is not closing, and we're running out of savings, right? That savings number, I know we've brought out a couple of times. And so what are you like? That is one of the basis for why you think we may slow down after the holiday season.
Yeah, I think there's two things going on here. So first, the micro level. So this is the Bureau of Economic Analysis. They keep track of what people are spending. So if you take a look at this right here, this is actually the graph of what people's incomes are doing. So overall, when you take an aggregate of people's incomes have been increasing, right? That's inflation. Even our incomes increase. But then so are our expenses. It would be cool if our incomes increased and our expenses stayed the same, but our expenses are going up, as people know, when they go to the gas pump, when people go to the grocery store, even when people buy their holiday gifts. And I know you can't really tell here, but ever so slowly, this expenses is going up faster than our incomes are. And it's just barely perceivable, but you can kind of see that this is at a steeper angle than our incomes are. So that kind of sucks, because even though we're making more money at our jobs, things are costing more than the money we're making. And this little line down here, this is the one I'm watching really, really carefully. And this is the line of people's savings. And so as you can see, people haven't quite stopped. And that's what all that economic news this past week has been telling us. People haven't stopped buying at the rate they did when they had flushed with income. So how are people doing that? They're doing it by tapping into their savings. Savings is going lower and lower. And there's going to be a point where people are like, I can't tap into my savings. I can't charge my credit cards any more than they already are. I don't have a graph of charges, but it turns out credit card charges are going up. So when that point hits, I think we're going to see almost like a full stop. Like people are just going to be like, a switch is going to go off and we're going to see a huge drop. And all of these tactics that the Fed has been doing in order to make money more expensive are going to kick in at once. Now that's on the micro level. I want to also, when you get a chance, I want to show you what's happening on the macro level.
Sure. And I was just going to throw in there, with us being in December and it being the holiday season, I imagine we may hit a peak of spending because of all the Christmas shopping, and then January rolls around and everyone's like, oh shit, we spent too much.
Exactly. I won't, usually January we see a whole bunch of returns. I mean, it's a big spike of returns of the Christmas gifts. I wouldn't be surprised if that spike is bigger than usual. I also want to point out that, this little rally that's been happening since about the middle of October, this is getting investors excited, and it's getting people excited because, of course, these numbers are reported on the nightly news every night. So people are kind of getting excited that maybe the downturn is over. And so there's this optimism out there that's maybe unwarranted. It's kind of like, we don't know why we're happy, but things are going up, so we should be happy. But behind the scenes, when you search on the Fed balance sheet, that's what I've taught people to do, to see about this whole bond selling thing. It turns out that just in the last 3 days, a lot of economists have been really critical of the Fed bond selling. And they've been writing articles that are showing up in pretty big news places like Reuters and Bloomberg and MarketWatch. And even people like Janet Yellen, who's now, Janet Yellen's had a whole bunch of jobs helping to monitor monetary supply and things like that. Now she's part of the executive branch of the U.S. government with the Treasury Department. She's even been speaking out. What we're talking about here is this other tool that the Fed uses. It's called the balance sheet. And I actually did the numbers that were given out last night, which haven't been added to that graph yet. But sure enough, we've actually shrunken over the last time we reported here. It's 8,621,000,000. We're now down at like 8,570,000,000. I think they've dropped another 50 billion. This selling of bonds right now, the effect it is having is it's raising bond rates. And so people are buying bonds, and the money that they're using to buying bonds and buying more secure investments, they're taking from their more riskier investments, which is why we're seeing a lot of the tech industry declining, and why we're seeing some of the more riskier investments like crypto and stuff all bottoming out and busting their bubbles. It's because that money is moving to more secure investments. So we're seeing a huge sector rotation right now. But behind the scenes, and this is what Janet Yellen has been warning about, there has to be a certain amount of liquidity into the monetary supply. And if the Fed is shredding money, that puts that liquidity at a problem. And so the banks, our banks have a certain amount of cash that they keep on reserve, and it was 3 trillion. It's down to 2 trillion. And the banks have to have that just in case all of a sudden we all, as consumers of the banks, start to get freaked out by what's happening in the economy, which might happen when our savings gets low. We're going to all run to the bank and cash out our bank accounts, and the bank's going to have to be able to deal with that. So they need to have a certain amount of liquidity in case there's a run, in case there's fear that comes all of a sudden. And this Fed selling of bonds and kind of the shredding of the money is really reducing that liquidity. Janet Yellen's warning the Fed is sticking to their guns and saying we still want to shred another at least $2 trillion over the next few years. And, economists just in the last week, I said, if you search on Fed balance sheet, you'll see a bunch of articles. They're starting to warn that, this is a dangerous thing. This is not, this is a tool that we've only been using in the last 14 years, which is a small amount when it comes to kind of managing money supplies. And they're saying, be careful, because if you reduce the liquidity too much and you create a problem above and beyond just sector rotation, but actually create a problem where people start pulling their money out of markets and out of bonds and you're going to create a problem. So even though in the short to maybe even medium duration, we see this little trend, I feel like we're speeding up towards a brick wall.
All right. Well, that's great insight. We're definitely going to keep an eye on that balance sheet. I know we like to touch on it week to week. And so if you're watching, listening for the first time, and you're kind of interested in what AJ, the details of what AJ is talking about, some of his strategies, some of the things that we do here at Trading Trainer, I've gone ahead and thrown a link to our free daily workshop where AJ basically breaks down his strategy for how to use options to generate, monthly income, almost like a paycheck. And so we've been getting, good feedback from this. I know we just created some new ads. So we're getting some new members, some new eyeballs coming into the mix. And so if you haven't checked it out, I just threw the link in the chat. It is there. In the meantime, we're going to take a little bit of a break, and then we're going to go into AJ's pick of the week. We're going to do our speed round. And then if anybody has a ticker that they're watching that they would want AJ's insight on, throw it into the chat, and we will see if we can cover it. Otherwise, we're going to take a little break, and we'll be right back.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. So before we head into your pick of the week, I don't know how in tuned our viewers are with what's going on around the world, but a lot of the news that keeps coming out of China is their super strict approach to managing COVID. And I found an interesting clip here, right? So if no one's really seen the battle that's going on, I believe in this clip, it's the government officials in the white with their look at these shields that they're pulling out into the street. And they're like taking people right out of their homes and plucking them into quarantine, and the people are fighting back. And I've heard some things coming out of Foxconn. And so, fortunately for us here in the States, we've been able to move past COVID. I know I saw an article yesterday in the LA area that they might bring back indoor mask mandates. But it's nothing as severe as this. And so I guess that's the question is, what are our thoughts on this type of policy? Is it worth it? I'm curious to know what you have to say about it.
I mean, here's some thoughts. So first of all, I think what sparked a lot of the craziness in China is that they're forcing people to go into quarantine, and then one of these quarantine areas caught on fire, and like people died in quarantine, and they weren't allowed to leave. And so like something happened, and that caused like people to be like, okay, enough is enough. The other thing is if the China economy, I think it was like 5 years ago, the China economy. Somebody, I don't know if it was Xi Jinping or if it was one of those representatives. He said something about the economy needing to grow at about 5 to 6% in order to keep the 1.4 billion people happy, right? If the economy is growing that much and the money is flowing into people's pockets, that tends to make people kind of happy, right? And when you do zero COVID policy and you like shut industry down and you shut down kind of the key places like Shanghai, you put constraints around places like Hong Kong. You're trying to maybe think about putting constraints around Taiwan. These are all like manufacturing mega places around the world. And when you start to do that, um, you slow down your economy, and now people are not only being kept at home in quarantine and like getting in trouble and stuff like that with the government. And China has like taken on these crazy things where they like have lots of cameras everywhere, like Big Brother is watching you. Not only you got that craziness, but now you don't have people making money because things have stopped. And then you're also displacing. China's a big player in the world. You go and you buy anything and you turn the label over, you're going to see probably like 80% of it made in China. And that's like disturbing everything on the global supply chain. I think there's a better way. I think you can't get around this COVID. You just have to get everybody vaccinated and go on with life the way that we have here. I know that COVID, and especially the big cities, is starting to make kind of a winter resurgence, but you just take care by a case basis.
Yeah, and I do like the big drama in the US was the vaccinations, right? The mandates of the vaccinations. But if we were
I
to
don't
add,
think they have that problem in China. I think people were forced.
yeah, but I think their issue is not everyone got it, right? I think the older like because there's so many people that it just hasn't made its way through. So
Yeah.
for us, I think for us in the States, we would rather be mandated to take the virus than to have to deal with this type of control,
Oh yeah.
especially in the bigger cities. So I think kudos to everyone that helped
Yeah.
us get through this so that we don't have to deal with it year after year
I
because it's
gotta
getting
say,
serious in China.
that what's his name? Dr. Fauci is leaving his post. He's retiring. But he said something in his speech. I don't know if you caught it, Sip, but he said he brought back, the thought that maybe this virus didn't just jump from animals to people. And I always wonder, why is China taking this zero COVID policy? Like, what do they know about COVID that the rest of the world doesn't? I don't mean to spark anybody's conspiracy theories out there, but when Dr. Fauci said something about it on his way out, I was like, oh gosh. So it's still out there that might be they might know something because they might be the manufacturer of it.
Yeah, well, we'll definitely keep an eye on it. I feel very fortunate that I don't have to deal with this. I can, not wear
Go
a mask,
outside.
go outside, go to the grocery store. And speaking of grocery stores, let's just roll right
Yeah.
into it. For
Yeah.
your pick of the week this week is a chain that's been making some moves lately, I feel like, and that's Kroger, ticker
Yeah.
symbol KR, which I believe specializes in
Groceries.
grocery chains and stuff. I know here in Los Angeles, the big chain is Ralph's, and I'm a frequent customer there, and I've been seeing them developing their technology. Their app is getting a little bit more innovative. I think
Yeah.
Kroger just purchased them, and so
Yeah.
a product, a service that everyday people need to use. And so what are you seeing in the data? What are you seeing in terms of investment opportunities?
I mean, you're absolutely right. Just on a sideline, Kroger's all about mergers and acquisitions, and they've been, consolidating their grocery store chains by acquiring quite a few smaller chains. Listen, they follow from a fundamental perspective, they totally meet all of the checks on our checklist. They have strong dividends. They're a good company, and they may not be in an exciting sector like EV cars or something like that, but they sure are a tried and true company. And right now, investors are okay just holding the stock and collecting the dividends, which is making this sideways choppy pattern that, guess what, you can totally make an income off of simply by trading the dips and the troughs, the peaks and the troughs. And so look like, as of yesterday, I got a signal that we should be either, if you're already in Kroger stock or in some call options on Kroger, you should be thinking about selling some call premium, buying some protective options. These would be put options. If you're not yet in a position, you can take the opposite approach. We can talk about shorting some stock, or we could talk about buying some deep in the money, far out in time put options. But it looks like not only did we get the signal, and I got to say, we got the signal, and then I looked for validation. This is a pretty nice bar pattern that shows that we may have found a top. And in addition to that, I got some nice healthy volume leading into this signal. So I felt very good last night, perhaps looking for an opportunity to short some Kroger stock or buy some deep in the money, far out in time put options. And today I'm just getting validation that today might be the thing to do. I'm going to wait until the afternoon or even evening session. It wouldn't even be a bad idea to wait until Monday. But so long as things are still going down, I might consider doing that, at least in my paper trading log, which if people are new to selling premium, they might do this as a paper trade. And by setting up that initial, I call it the initial covering position, the next time I bottom out, I'll be ready to sell some put options and then buy some protective call options. I'll sell some near-term put options that are at the money, and I'll buy some call options 3 to 6 months out, somewhere with a strike price up here around $50. And, that'll be the beginning of me creating some income on Kroger. And I think this is the perfect position stock to do that, Kroger.
Right. You would assume the week after Thanksgiving, everyone doesn't shop for groceries for a couple weeks.
Yeah. And I don't know, how much profit margin there is in groceries, especially right now with food prices up. But, it's people can't stop eating. So they have to keep their cabinets stocked with something. So grocery stores are always going to have customers. What are you going to do? Eat your back lawn? No.
I could tell you the profit margin on a quarter-to-quarter basis.
Do it.
1.7%.
Yeah, so it's not a huge growth, but we don't, as premium sellers, we don't want to be a huge growth stock. A lot of people wonder about me and my premium selling, but when you're buying options, it's kind of like the person who goes to a casino, right? And if you know anything about casinos, if you look at the big picture, the way that casinos make so much margin is that, pretty much nobody is going, very few people win, right? That's the whole idea. They invest money and there's a lot of losers. Now they do pay out a little bit, but when you sell premium, right, the buyer is like the person who goes to a casino. But when you sell premium, guess who you are? You are the casino, right? I am the one who, I'm going to be paying out a few times, but for the most part, I'm going to be making these little gains of people who are buying in, So I like to be the casino. And if you look at any casino's balance sheet, you know they make money in the long term. They make lots of money in the long term. And so do we as premium sellers. So if anybody has a question about what's the difference between buying options and trying to, catch those moves is kind of like being a patron of a casino. Whereas selling options, selling premium, like I talk about every week, that's all about being the casino.
Yeah, and if you haven't started to utilize options in your portfolio or into your investment strategies, if you want a little bit more attention to detail, if you want to be involved in more hand holding to these approaches, because there is some learning, and it sometimes it's easier to do it alongside someone rather than spending hours watching videos, although that's not something that, we're not saying one is better than the other. It's just people learn in different ways. And
Your learning style, for sure.
exactly. And so AJ has recently rolled out his one-on-one coaching program. And so if that's something that you're interested in getting that hand holding and learning more about what that process looks like, I'm going to go ahead and throw the link into the chat. Feel free to just head on over there and schedule a meeting. I know we've got some of the best in the business there. They're going to answer all your questions. No hard selling. Just breaking down the details of what a plan like this looks like. And AJ is very confident in the results. Different strategies can be applied to different portfolio sizes, but over time, AJ and his team have proven that these strategies are successful. They've got the data, they've got the numbers to back it up. And so if that's something you're interested in, head on over. I'm throwing the link in the chat now.
Yeah, cool. Yeah, the scoop with that, by the way, folks, is our coaches are almost filled up, and we've got probably about 3 more slots. So if you want to get some of that one-on-one coaching and you want to start right away, now our coaches will work through their folks, so we can definitely take orders and have you start maybe in January. But if you want to get a spot and you want to get started right away, our coaches are almost all filled up. And I'm trying to find new coaches, and I go to my long-term participants to see if they're meet the criteria for coaching. It's very difficult. And so if you're interested, you better get on the ball. Those talks that you have with us, there's absolutely no obligation. We actually want to make sure that you're also a good fit for our program. We don't want to just take anybody. So it's kind of like a get to know you type talk to make sure that we are the right person for you and you are the right person for us.
All right. So the link is in the chat. The link is in our little scroll bar if you want to check that out. Now, moving on to the most exciting part of the show. This is our speed round. So every week, our members, our viewers throw out some names, some things that they're looking at, and we pull them up to see if there's an opportunity, get AJ's input on things. And so our first ticker comes from Ashley in Boca Raton, Florida, who's interested in a name that used to be very popular when we first shut everything down, and that's Carnival Cruise Lines, ticker symbol CCL. I'm assuming they're on the rebound because the COVID restrictions have been lifted. Now, is that what we're seeing in the price?
Not really. We've seen a kind of a stalemate around $10 here. It actually dropped down a couple months ago. I think there's those people who have cabin fever, like not figurative cabin fever, and they want to get out there and they want to be doing it. But there's still a worry that, if you put yourself on a sardine can for 5 nights, you could wind up getting COVID. And so I think that there's a stall, but you know what? That makes it good for us. However, here's what I see, Ashley. I see that I tend to like to see channels that are choppy. And the reason why I like to see channels that are choppy is because that tells me that there's some micro accumulation and distribution happening. When I start to see a channel like I'm seeing right here, where the underlying symbol is starting to stagnate like this, what that tells me is folks are feeling a little bit confused. they're feeling a little bit uncertain, then they don't know what to do. And I don't know if you ever actually have been in a situation where you didn't know what to do, but the longer that you stay in that state of confusion, the more anxious you might have gotten. And that's what happens to investors. They start to get, I kind of like to envision like a pressure cooker. Like the longer that you stay at this price without having any sort of like sideways choppy movement, the more the people are like, what should we do? And they're getting anxious. Should I buy? Should I sell? And any small little like match that you throw in there, any sort of news headline, one way or the other, will cause people to like automatically jump into buying or jump into selling. This is kind of the classic setup for a potential breakout. And so here are some ideas. One idea is when you see the classic breakout for the classic setup for a breakout, and you don't know which direction it's going to go. A lot of people jump to something called a straddle or a strangle, which is an option trading strategy that profits whether it goes up or down. It just won't profit if it stays going sideways. A lot of people jump to that strategy. I might also throw in that when people get like this, they do start to buy options, and that option price, that causes option prices to go up. It's called the implied volatility. And the way that you can profit on implied volatility going up and then coming back down is with calendar spreads. So there's another one. We're getting into some advanced option strategies that probably too advanced to be talking about on this show, but those are two things you may want to look into. The other thing is, what do you think, Ashley, about owning Carnival stock? Because this might be a perfect time if you want to own it in the long term. You think that there's going to be a rebound over the next few years in Carnival. Maybe we use a naked put strategy that I talked about before, a cash secured put strategy, and we try to buy Carnival at, say, for instance, let's see if there's a strike price at $9. So if I come over here to the December 16th, oh yeah, there's strike prices every 50 cents. So say, for instance, you only want to pay $9. You go ahead and sell a $9 put that's going to expire on the third Friday of December. If you sell that put, you're going to immediately get something like 23.5 cents per share that you sell. And you're going to do that in lots of 100. And so you're going to get $23.50 for every contract you sell. Make sure you have that money, that $9 a share, $900 per contract, just in case somebody wants to sell it to you. If they don't sell it to you, that's $23.50 per contract that you just pocket at the end of the month, and you do it again and again and again. But then when somebody does want to sell it to you at that price, you're ready to pay it. That means you lock in the price you're willing to pay. And if nobody's willing to sell it to you at that price, then you get paid a little bit of a bonus. I love that strategy.
Yeah, and I'm looking at some of the fundamentals, and I know that they're skewed because of all the shutdowns, but quarter over quarter, they have had an 80% increase in sales, right? And so people are starting to get back, and I think that buying and holding into the long term and using options as premium is a great strategy. And
people
and
love cruises, man.
Yeah, and especially at the price point, right? With a $9 stock, you can get some pretty cheap options. So I think this is a great shout out. So thank you, Ashley.
Yeah, they're still losing money, but you know, a quarter ago they were losing $1.61. Now they're losing 65 cents. So they're making, you know, they're recovering slow but sure. So yeah, I'd be all over like owning this in the long term. But look out those other strategies as well.
Awesome. There's always multiple ways to approach these using options, which is, you know, the bread and butter behind them at the end of the day.
It's puzzles. Puzzles. Yeah.
Moving on to our next name. This is David from up north in Ottawa, Canada, and he's interested in a name that we've covered a handful of times, and that's Advanced Micro Devices, ticker symbol AMD.
Man, I like this. I like this stock a lot. Now, you can tell that we looked at AMD back in the day, and we were looking at it when it was sideways channeling between about $85 and $100. You'll notice it isn't there anymore. It's dropped down, just like all tech companies have. they probably have, kind of fell to the whole, the whole sector is going down. So everybody's selling no matter what the name of the stock is. It looks like it is starting to sideways channel just at a step function down. Now, I don't like to buy into these levels of support and resistance until they're tested twice each. And so, for instance, we may have this level of support at about $75, level of resistance at about $75. And it looks like we might have a level of support at around $60, something like that. But again, that level of resistance is just now getting tested second. I don't want the level of support. What I might consider doing here if I want to set up a premium trade is I might consider waiting until I'm for sure at a top, and that would be a great opportunity to buy some puts deep in the money, far out in time. I'm going to keep saying that. Buy some puts or short the stock. It's kind of an expensive stock to short, so I'd try to buy those puts instead, a little bit cheaper on my wallet, and then let it drop. When you buy those puts and the underlying symbol drops, those puts are going to go up in value. And if it continues to drop, that's your trade right there. If it doesn't, if it kind of stalls around $60 and tests that level of support again, then that would be a great opportunity to set up the income trade where we would sell the near term at the money put options, buy the 3 to 6 month out protective calls with a strike price around $80 and start generating that monthly income. Or if you're doing weekly options, maybe more often than that. And that's kind of how I would trade AMD. I also might suggest to you, this is David in Ottawa, and SIP's way into the fundamentals. This is a company that I think I'd personally like to have in my portfolio for the long term. What do the fundamentals look like, SIP?
Fundamentally, we are quarter over quarter. Well, the last quarter was kind of a bump, but on the year, we're up 68% in sales. Profit margins are dropping. The analysts on the low end are pricing 60, on the high end 200, so quite a range there.
Yeah. These people are giving Intel a run for their money with their Ryzen chip. A lot of, you go into Costco and you'll see laptops and you'll see them either advertised with the Intel CPU or the AMD Ryzen. I actually have a new computer that we're building here for our trading platform, and it's built on an AMD Ryzen chip. They're also giving NVIDIA a run for their money on graphics cards. So this AMD company is really, I think they're positioned well for the future.
Yeah, there will be no shortage of need for chips in the future. I mean, did you see the article with the police robot in San Francisco that now has like the ability to
take people out?
We're in that world now. We're in the RoboCop world.
Yeah,
and they all need chips.
One of my favorite movies, by the way. Even though now I watch it, it's quite cheesy, but man, I love that.
Man, we're getting there. All right, we do have a live question coming in that I thought is a good name to look at, and that's Hood. I believe this is Robinhood. Haven't heard them in the news lately, so curious if that's maybe a good opportunity to get in.
Absolutely. You're starting to get it. That's exactly right. We don't want it in the news because the news makes it not good for selling premium. We want something that's pretty mellow, and Robinhood's that. In fact, they're losing less and less money, which means they're probably figuring out how their bargain basement brokerage work. Let's go back a little bit. I want to take a bigger picture. I want to take a step back. Yeah. Oh, this is great. So they have been trading at the same price since about February of 2022. And I like that. I like that a lot. So yeah, let's zoom in now back to about a 6-month chart. Yeah, and look, they're forming a bottom. This bottom looks well tested, somewhere, around $9.50 seems to be their bottom. I did get a signal back here on November 23rd that a bottom had been found. I don't know how valid that signal is. The price pattern looked pretty delicious, but the volume was just the opposite of what I want to see. I want to see building above average heavy volume for me to think that's a valid signal. But then as time went on, I see that building volume and I see the price patterns. Maybe, actually today or Monday, if you haven't already picked up some of this Robinhood stock and it's at a great price where you could pick up the stock, there might even be some, let's go far out in time. Let's look at, for instance, this January 2024. Oh yeah, dude, you could buy the back month deep in the money call options. And instead of buying the stock, buy it at a little bit of a discount. Instead of paying $9.93, you can pay something like $5.65, something like that. Yeah, I like that. I would consider something like that.
Yeah, and what's crazy is if I were to take this advice, I would use the Robinhood app to go and find the options because I've learned that they have a very seamless options component to their mobile interface that has made implementing these strategies a little bit better.
Give me 1 second, Sip.
10-4. All right. So that's Hood. Just a quick rundown of the fundamentals if anybody wants to see. Their sales are decreasing a bit. On the analyst side, the low end is $7. The mean is 12, so we're a little under that right now. And the high end is 28. So definitely one of those setups. All right. Looks like we've got AJ back. Okay,
yeah,
AJ.
I had to plug in my computer.
No worries. It happens. All right.
Yeah.
So thank you for that live question on Hood. Moving on to our last guest question for the speed round. And this is Mike from Pueblo, Colorado. And he's interested in a fan favorite tech company of the ages. And that's PayPal, ticker symbol PYPL.
Okay.
PayPal.
All right. Oh, it's kind of expensive. But I do see, what I just got through saying. I like to see a couple tests of support. I like to see a couple tests of resistance. $75 to $90. I like that. It looks like we're coming down here. I don't have a signal that we have found a bottom yet, so I'm not in any rush to buy PayPal or buy PayPal call options, but I'm going to be patient here because I do think that this could be an income generator. In fact, before I jump the gun here and give any sort of suggestions on turning this into a premium trade, let's go out. Yeah. Okay, so it's been at this range since, again, February of this year, which is soon to be February of last year. So yeah, I would wait. I would wait until I got a solid signal that I have bottomed out, and then I would consider, if you've got the money, buying some of this stock. If you don't have the money, I'd buy some deep in the money, far out in time call options. Let's look to see what we've got. September 2023, that works. And if you don't want to do September 2023, there's January 2024 leaps. Yeah, there's plenty of options, options to buy options. Sometimes I make myself laugh. So yeah, I would consider doing that. Or if you're still unsure of how it is to be the casino, paper trade this sucker and see what happens. But my big advice to you is wait until you have a solid signal. Don't get anxious. Don't shoot until you see the whites of their eyes. Don't trade until you have a solid technical signal. But I think this would be one I'd put together a trade plan on. And this is the one I would probably execute by buying some of this stock and then how far it went up. And if it didn't go up, I'd sell premium against it.
All right. Well, that concludes our speed round. Thank you for that, Mike. All right.
Mike.
So heading into the first week in December, the last month of the year. For any of our viewers who are active in the markets, investors taking on these positions, any advice for the month, the end of the year, maybe even just going into next week? How would you be positioning yourself?
Selling options, and except for, like, for instance, in that special case where we were looking at Carnival Cruise Lines, for the most part, when you sell options and you use kind of protective strategies like what we teach here at Trading Trainer, and if you want some insights on that, we talked about going and attending that free workshop that we run every day. Go attend that workshop. Even if you've already attended it once, do it again and pick up some of those techniques about the protective options. But if you have those strategies and you have them in place, it doesn't matter what happens if the market either continues to go up in this short to medium term, at least that's what I'm forecasting, uptrend, or if it hits a wall and starts going down. Our income as investors will stay solid because of the way we structure these trades. So my advice is create a trade plan and then trade that plan you created. Stay solid to your planning. Don't let emotions jump in the way. And just keep on keeping on. That's how we keep creating that consistent income through trading.
All right. So the links to the webinar are in the chat. The links to the one-on-one coaching is in the chat. If you've enjoyed the broadcast, hit that like, hit that subscribe, hit that follow button. And, if you have any questions, feel free to leave it in the chat, leave it in a DM, send us an email. And if it's a name that AJ likes, we'll review it. If it's not, we'll still review it and tell you why. That's the beauty of kind of the speed round and what we're doing. Other than that, any final words, AJ?
Tell your friends about our show. We'd love to have more people join in with us.
That's right. Tell your friends, tell your family, tell your coworkers, tell the guy you're sitting next to at the stadium, watching your favorite sports team.
Holiday dinners,
holiday parties. I just went to one of those last week. So yeah,
this is the month.
That's right. All right. So appreciate everybody tuning in. AJ, appreciate your time. We'll be back next week for another broadcast. Otherwise, hope everyone has a good weekend.
Take care, everyone.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.